Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live in YouTube. On this segment, what I would like to do here is review the latest Associated Press report that we published through Seeking Alpha, and also take a look at the Nikkei Robo Advisor for the silver market and for Bitcoin. So we'll take a look at it in a couple of minutes. We'll be right back. This is the latest report that we published in Seeking Alpha in the Associated Press as of this morning. And what I would like to do is simply to take the time to review this report. Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy weekend podcast for August 18th, 2021. Title: The Psychology of Trading Gold During the Monetary Reset. Summary: the monetary system is in the process of resetting itself. Since last March, when the pandemic broke the system, we have been in a time of change and resetting. A tremendous amount of stimulus has come into the market on top of a 28+ trillion debt load, which seems to be having little to no impact on the markets. The Feds continue to print money. We are looking at an explosion of the monetary base, and we are accelerating the devaluation of the U.S. dollar. With all that happening, it raises the issue of why gold and silver are where they are when other assets are rising fast. Fundamentals. The monetary system is in the process of resetting itself. Since last March, when the pandemic broke the system, we have been in a time of change and resetting. Gold rallied $600. Stocks made a bottom at about $2,100, and then we have never been back to those levels. Gold is close to $1,800, and stocks are far higher. Gold is lower than the old high, yet stocks continue to make new highs, irrespective of the fundamentals, which are completely broken. The U.S. dollar has been declining in value. A tremendous amount of stimulus has come into the market on top of a 30 trillion debt load, which seems to be having little to no impact. If interest rates do go up, defaults on debt repayments could cripple the economy. Therefore, interest rates cannot go up. U.S. bonds may be downgraded. The Feds continue to print money. We are looking at an explosion of the monetary base, and we are accelerating the devaluation of the U.S. dollar. More people are questioning how the U.S. dollar can be the world's main reserve currency with debt of such magnitude. With all of that happening, it raises the issue of why gold and silver are where they are when other assets are rising fast. Inflation is at 4%. Or 5%. The 10-year note is at 25 to 130 to 125 to 130 basis points. The U.S. dollar's purchasing power is declining. Even 4% a year adds up pretty fast. Analyst James Flanagan of Gann Global Financial recently discussed the mystery of why gold and silver are not going up fast, given the mountain of bullish news. Gold went down when the stock market crashed at the start of the pandemic. The government intervened massively and debt skyrocketed. Hard money advocates would say that this is bullish for precious metals. Gold topped the previous high in August, but then gold reverted after the 2011 high. Biden was elected and gold rose again briefly. The Democrats took over the Senate and gold hit another lower high. If bullish news comes out and the market ignores it, it indicates that the market is in a fundamentally weak position, which has played out repeatedly in gold. A low was reached on March the 8th, and then inflationary news hit the media. With inflation in commodities, real estate, and stocks. From March 20 through January the 1st, 2021, gold rose and then fell again as the debate started on whether inflation was going to be short or long-term. Gold is in a bear market with lower lows and lower highs. Now we have the Afghanistan debacle, which has been a long time coming and an impossible situation, with a modest increase in gold prices. The signs still point to a bear market. At the same time, the Thomson Reuters Commodity Index has been rising more than 110% since April 2020. Up about 51%, even as gold has continued to go down. The S&P has also been rising fast as we have real estate prices. Starting in the 1920s, governments began to believe that they should try to smooth out the ups and downs of economic cycles. In the 1930s, during the Great Depression, massive government intervention drove the stock market up significantly, 324% over 5 years. A similar effect seems to be happening with government intervention in the markets today. Flanagan recommended selling bonds because in the current environment, you want to be a borrower, not a lender. The government was willing to spend anything it took to keep interest rates low. The government spent $120 billion a month paying for their own bond or debt. This is insanity, Flanagan said. Part of the U.S. credit score is what percentage of the credit limit are we using. The more you use, the more risk the investment. The U.S. government is borrowing money and selling bonds and then buying them back, their own bonds, in a shell game. The government is manipulating the market, Flanagan said. In the long term, it will be bullish for precious metals, but in the short term, the government can keep buying their own bonds and keep interest rates down. They're manipulating everything, Flanagan said. It is likely that the government is also selling gold. They are selling gold and artificially depressing the price, he said. The government can do whatever, and at some point, the government can't do this forever. It will reflect it in significant rise in precious metals prices. The lower the lower prices for gold are a historic buying opportunity. The prices of precious metals are artificially low compared to where they should be, and at some point, the government attempts to depress the price of gold and prop up the U.S. dollar will fail, and precious metals will rocket up. It is unclear what the Fed will do at their next meeting. Are they going to announce that tapering will occur soon, later, never? Trying to figure out the fundamental is very difficult. Therefore, we focus on technicals in our variable changing price momentum indicator. We let the market tell us where it is likely to go. Technical analysis of gold. The weekly VCPMI report for gold said that the weekly trend momentum of 1778 is bearish. The weekly VCPMI of 1747 indicates that since the market is trading above this level at 1786, it is a bullish price momentum. A close below 1747 would negate this bullishness to neutral. If you are long, Nikki the Robot recommends taking profits at the VCPMI weekly sell 1 and sell 2 levels of 1816 and 1848. The robo-advisor based on the AI also suggests taking profits and shorts into corrections at the VCPMI weekly buy 1 and 2 levels of 1712 and 1643. For the past 2 days, we've tested 1796 into this area of distribution of supply. You can see that resistance is beginning to form. We are getting supply so far. For the daily numbers, if we close below the average price, we will activate the 1781 and 1774 targets. Be careful up here. The gold market has failed to follow through above 1800 levels, and there appears to be more sellers at these levels than buyers. Protect any gains up here and look to buy corrections into that 1712 to 1643 levels. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes. I wanted to share that information here so that you can see pretty much what I believe is happening here. I've been mentioning for the last couple of months that I find very frustrating that the price of gold is not going up based on these historic fundamentals. So we have a little bit of supply that's coming into the market here, it seems. Let's take a look at the market. And I also want to take a look at the weekly reports and see what it says for the silver market.
Momentum of 25.55 is Hi everyone, this is Equity Management Academy with the weekly silver report for August 13th, 2021. Summary. The weekly trend momentum of 25.55 is bearish trend momentum. The weekly VCPMI of 23.47 is bullish price momentum. A close below 23.47 stop negates this bullishness neutral. If long, take profits 24.65 to 25.56. Trading instructions. Weekly trend momentum 25.55, bearish. The silver futures contract closed at 23.83. The market closed below the 9 SMA 25.55 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum 23.47, bullish. With the market closing above the VC weekly price momentum indicator of 23.47, it confirms that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 24.65. Sell 2, 25.56. Exit. Shorts, buy 1, 22.56. Buy 2, 21.39. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 22.56 to 21.39, and go long on a weekly reversal stop. If long, use the 21.39 level as a stop close only in good till cancelled order. Look to take profits on longs as we reach the 24.56 to 25.56 levels during the week.
Let me come back here to the market and take a look at silver. And this is the daily chart. And I want to bring back here the silver chart in Thinkorswim to get a little bit of better perspective on what's going on here. For example, on the monthly numbers, if we can expand from the weekly to the monthly numbers, we've come down to a 2326 buy to level on a monthly basis. And that's for the remainder of this month. So coming down into this buy to level now, if we take a look at the mathematics of the reversion to the mean, you're looking at a 95% probability being activated that the reversion to the mean principle can unfold and bring the price up to 2566. So we have a little bit of a conflict here in terms of the short-term signals. The stop is on the weekly is the average price. The market is about 40. It's about 47, I believe. And let me just take a look here, because we are coming down on the daily into a bearish price momentum. But if we take a look at the bigger picture here, we are entering into an area of accumulation of supply. The weekly number, the average price is 2347, and as you can see here, when the market came down below the daily average of 2353, it did not have the buy-in strength, the buyers, to bring the price momentum to a bullish harmonic alignment, so to speak, and with the target of 2379. But instead it failed and came down below the daily and weekly average and has come down into that buy one daily. And we're looking at the buy two level right below that. So it remains to be seen whether we're going to be closing at 2347. But if we do, this signal will go neutral. And a close above this average daily and weekly actually would activate the buy trigger. Or we can come down again to 2322 and activate this level, which is the daily buy at 2322. So we are in a bit of a bearish mode, but we are activating buy triggers here on the daily. And if we look at the monthly, we're looking at a potentially very strong buy signal from the monthly level of 2326. It has been activated by coming down here, as you can see, testing this level at 2323, reverting right back up again and activating a buy trigger. So we seem to be rolling on the longer term picture into the bullish camp. Short term, we seem to be experiencing a little bit of sell-off pressure. But I believe that the market is indicating, again, particularly for the bigger trends, that we might be looking at a extreme below the mean buy two level opportunity with a 95% probability that the price can revert back up. The initial level would be 2441. And a close above 2441 will bring 2566 into the picture. The other market that I want to share with you here is to review basically the Bitcoin report that we published here, that Nikki the Robot, Rob Advisor, published here a little bit ago. And I want to review and see what's happened here.
Consistent and
Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room special trade alert for Bitcoin. We have gotten a buy signal at Bitcoin at 31,752. If long, use the close below 31,752 as your protective stop conservatively. Or you can add to your position and use this level of 29,938 as your second stop and entry point if multiples are being activated. The initial target is the average price of 33,853. Closing above 33,853 activates the extreme level above mean of 35,667 to the sell-to level of 37,768 for the rest of the week.
Are you looking for an automated artificial
Let's take a look and see what's happened here. And obviously, this report was published on July 21st. So let's take a look and see the market was trading pretty closely, as you can see on the 21st. It activated a buy trigger, and it caught this move right at the bottom reversion unfolding here. And we are trading now at 45,485 from the 30, even this level here around 34,000. So Bitcoin has reverted back up to the bull camp, even though we are a little bit overbought short term, as you can see here. It's taking the supply pretty well. And so we have a lot of trading going on here between the supply and demand, but the market is showing us more buyers are coming in and potentially could take out the 47,325 level. This will shift the price fractal into a higher price fractal, as it's doing from the low that we made here. We had the first run, the first leg, retreated back a little bit here for a couple of days around the early August, and after testing this low about 3 times, we reverted back to make another attack, another high. So we seem to be doing pretty much the same thing, and it appears that the buyers are coming in here, and if we take out this supply or the resistance level up here, then we got a pretty big move coming up here for Bitcoin. We seem to be shifting money into assets that are indicating looking for a value or safety. I think the market, the smart money, realizes what's happening here with the U.S. dollar. You know, we've increased the stimulus 30% of GDP, and so the purchasing power of the U.S. dollar is going to be affected by that much. And obviously, we see that in assets like real estate and pretty much across the board. The problem that I believe we're going to be dealing with, and I'm not sure how Chairman Powell is going to handle this, is the fact that inflation is running much, much higher than expected. And we're not sure whether this is going to be transitory or not. So the market is nervous in terms of what action is the Fed going to take as far as tapering, as far as possibility of raising interest rates. So let me just comment to you that this attack in the gold market, this correction in the gold market, is simply a manipulated action by the central banks, which are manipulating the paper market to accommodate their physical needs as the price drops. It appears that they're buying large amounts of gold, physical gold, taking delivery. And I believe that the signs are out there, particularly with the IMF creating this SDR portfolio of $650 billion that they quietly have put aside, is preparing just in case, as they say, the economy collapses. We are not getting any economic growth from all of this stimulus. And we are still in the possibility that the variant virus could continue to affect world economic growth. Australia is still in a lockdown. And so it's going to take a few months before we begin to see this impact, once again, of lockdowns or partial lockdowns globally. So there are things that still very, pending and making the market pretty nervous, and particularly the move of the Feds with regards to interest rates is causing a great deal of nervousness in the market, and potentially, as they say, quote, tantrum, end of quote, potentially could happen here. I think we're seeing that already in the precious metals. And once again, it's a matter of time before this anomaly becomes adjusted to the real reversion to the mean, or to the real value of gold. I'm not sure if it's 5,000, 10,000, 50,000, as Bitcoin is beginning to do. There is no power in the world that can control once the market gets ahead of itself or begins to break out into a cyclical pattern or cycle, a major long-term bull cycle. Governments can put regulations. Yes, governments can create limitations. And obviously, as they are doing, manipulate the price. But I believe, as long as I've been around, that there is no one, no government, no individual trader, no institution that is bigger than the market. And when the market decides to adjust to its true value, it could be a real violent move happening, particularly as we see that gold and silver are tremendously undervalued to commodities and other assets. Let's continue to watch the market here throughout the week, and I'll be posting you here every day. In the meantime, my friend, have a great trading day. Be safe. We'll talk to you soon.